Hey, everybody. This is Sean from Not Financial Advice. Today is Wednesday, March 27th. And on today's episode, we're going to be talking about if only I had bought back in 2019. So, if you're like me, you are the stock and investment guy for your friends and family network. And I recently had a phone call from a friend who had started up an investment portfolio late 2019, early 2020. He had several winners and several losers. But some of his losers he sold, and he was asking me about my opinion on buying into Nvidia and Eli Lilly. And so, what is it about stocks and investing that gets us to buy at the top and sell at the bottom? And what can we do to address that? So, I have some evergreen strategies, I have some tips and tricks looking at individual investments, stocks, and their particular metrics to see if there's a way that we can buy the highest of quality stocks that you can get on the train and no matter what happens, that train is going up and to the right, independent of bull market, bear market, or valuation. So I'm going to be showing you off some stocks today that you could have a lot of confidence in when applying this framework. I'm going to show you exactly what we're talking about right after this.
You need to diversify your bonds.
The only problem you're gonna have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, hit that like button and subscribe. Let's start out with a quick update on today's portfolio performance. Today I'm up about 295 bucks, 0.38. That's a bit less than the market, and what you can see here is that small cap stocks are outperforming. Fortunately, I own some of those. So my best stock of the day is Cintas Corp. I made a video where I had recently bought this, and I think they reported earnings today. It's up about 8%. Additionally, we have the worst stock of the day in my portfolio being Coinbase, down 2.66. And so, yeah, portfolio is looking good. And I think we should just jump right into today's topic of the video. So, my friend had contacted me having started a portfolio in late 2019, early 2020. Not a altogether bad time for buying stocks. Uh, Two of the ones that didn't do so well were Block, formerly known as Square, and SoFi. All right. And so to give my friend credit, he also had some really good picks in there. He had JP Morgan and Tesla, which have both done great over the years. And he also had Palantir, which I like a lot better than either SoFi or Block. And so, at the same time, back in late 2019, early 2020, Canadian marijuana stocks were on a tear and they've essentially gone to zero. So he did liquidate those, but he was, just wanting some feedback, asking me what I would do if I was in his shoes. And so, you know, what we came up with, I'll leave to just him, but it got me thinking about a topic for today's video, which is what if you could buy stocks that are going to take you on a smooth ride up and to the right without deviation? It sounds impossible, right? But it's not really. So, what I want to do here is show you a back test I had done with 10 stocks, and we're going to look at the attributes of 3 out of the 10 just to sort of show you stocks that are of such high quality that they have just tremendous momentum, and you can barely find a dip to buy in. You have to either get in or stay out and then go along for the ride. And so I've done a back test portfolio to 2016, and I put 10 stocks on here. So I put Ferrari, AutoZone, Costco, Cintas Corporation, Visa, Netflix, Domino's Pizza, TJ Maxx, Home Depot, and Ulta Beauty. And so they all have a lot of different things in common. But, how can you pick 10 stocks and beat the stock market? And so we did that here. There's obviously a lot of hindsight in this. I know that they've performed well. So did I construct this back test portfolio screener in a scientific way? Maybe, maybe not. But what we can see here is that this portfolio dramatically outperforms when the market is down and also when the market's up. And an equal weighted portfolio with these stocks beat the market over the last 8 years or whatever by about 8% a year. And so what are the things that some of these or most of these stocks have in common? And what can you do to pick stocks like that for yourself? So the first one we're looking at here is the stock of Ferrari. What you can see is over the last 5 years, we had the peak of bull market about late December 2021, and then we had a bear market in 2022 with strong markets in 23 and 24. But if you bought this stock at all-time highs, which my friend was asking about Eli Lilly and Nvidia, okay, if you buy a stock at all-time highs, can you pick a security in a selective enough fashion that even after um, a few years when you're into another bull market that you still have outperformance, buying at the top and just holding it? So this is up 62% from the bull market peak of late 21. We're also going to take another look at AutoZone. So the bull market peak of late 21 was probably around here for this particular stock. Through the bear market of 22 and through to today's bull market, the stock is up 46% up into the right. And now also what we'll do is look at Cintas. So this stock looks like it was at its peak on December 31st of 2021, going through a bull market, bear market in 22 first, and now through 5 hard months of a bull market, the stock is up 53%. So, what type of criteria or qualities do these stocks have in common? Let's look together and see if we can learn some evergreen strategies in stock selection for the top 1% of the highest quality stocks in the market. Like the video, subscribe to the channel, and I'm going to show you what I'm talking about. So, a stock that's just going to take you on a ride higher historically. When we look at these different factors, we can see revenue growth right around 7%. We can take a look at free cash flow growth, and we see that's above 7% up and to the right. And so we have two of these 4 or 5 criteria we're looking for. Shares down massively. Returns on capital employed, massive, near 35, 45%, massive for AutoZone. And then you see profit margins jackknifing up and to the right. And so you saw what those stock charts looked like up and to the right. And these are the things that drive those types of returns. And so, just more evergreen advice for picking individual stocks. Let's take a look at one more. And then what I want to do is hear from you guys your thoughts on yeah, I bought this a while back. I'm up 8% today. That's cool. I want to hear from you guys in the comments below what thoughts you have about, selecting these very high quality stocks in the top 1% of the market that are just going to win and run for you. It's certainly not the same as Block or SoFi. It's not even the same as Tesla. So when we look at Cintas, we can see revenue growth again above 7%. We can see free cash flow growth. We have it at 13% up into the right. We can also see these very high returns on capital employed, and it's going up into the right. So over 20% while shares are going down. And then you see profit margin going up into the right in a pretty big way from 7.3% to 15%. And so I'm finding the more and more I study and research stocks, if you have revenue, free cash flow going up, shares going down, you have returns on capital employed going up, and you have bottom line profit margin going up, that's where you get into these companies and you see these trajectories that are just simply up and to the right. Even buying when the market is high and holding forever, these stocks continue to compound, unlike that of companies who don't have as good fundamentals. So I hope this video was super, super helpful and informative to you. I'd love to hear from you thoughts in your comments about any of these individual stocks or just investing strategy in general. Thanks so much for tuning in. Again, this is Sean with Not Financial Advice, and I will see you on the next one.